morning. Comment allez-vous? How are you? Let me reload my coffee. We'll start in 90 seconds. All right, good morning. How you doing? Let me find where the music's coming from. Oh, found it. All right, good morning. Comment allez-vous? Ni hao. Ciao. Hey, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Yeah, cool. So anyways, my name is Wayne. I will be your guide. And there we go. I'll be your guide on this journey we call Forex. That's me. Wait, I don't have any gray hair. Yeah. All right, well, that is me. I got to update my picture. I got one, by the way, so I'll update it. I'll put that on the super important things to do. But anyways, I've been running the Forex for, gee whiz, more than 20 years now. Loving life, living large. I like technical and fundamental analysis. Yeah. Went to a private little school in Cambridge, Massachusetts for 5 years. Did some work at MIT and Oxford as well in my postgraduate work. Cool. Manage endowments for charity, because that's how the Wayne do. So anyways, nice to meet you. Let me know how it can help. Before Forex, I was a venture capitalist and a high-tech entrepreneur, and I worked in the nonprofit world. Even worked for NASA. Hey, kids, there was a rocket company before SpaceX. Yeah. Yeah. Cool. So anyways, yeah, I planned on being an astronaut, apparently, but I got the diabetes, so they don't let you in space. I got it at the Walmart. It's real nice. So anyways, that's me. So TRADARS is an opportunity for you to have a professional platform, not for the trading execution, but for the research and analysis. And let me tell you, it's a game changer. It'll absolutely, totally change the way that you trade. And you'll start making institutional quality decisions and setups, both fundamentally, technically. We do implied volatility. We have a bunch of very, very interesting tools that are ridiculous. So think of it as a Bloomberg terminal for retail Forex traders. Yeah, very cool. Bloomberg is $2,200 a month. We're less than that. And so we'll go through the tools a little bit today. But what you do need is execution. So you have a good strategy. You're well informed. You set your trade strategies in advance. And then what? When you click a button, you want to execute your trade. You want to do it fast. You want to do it cheap. But the other thing that's in your best interest is you actually want it executed. You see? You actually want it executed. Most foreign exchange brokers do not execute your trades in the interbanking system. Your trade never goes into the interbanking system. They trade against you. And they match you with other clients, but the way their business model works is that eventually everybody fails, and that benefits the broker. Trader's way is different, and they actually execute the trades. Now, how do I know that to actually be truth? How do I know they're really an ECN that actually executes their trades? Now, the interesting thing is, in the very early years of my relationship, like even early weeks of our relationship, when I was getting to know Traders Way, what happened is we had the Swiss National Bank pull the plug on their peg to the pull the peg on the euro. It shocked the world because 24 hours earlier they said they wouldn't do it, and then they did it. That's right, Abdul. You can think of it that way. Most brokers B book you, Traders Way, if you want to call it that, A books you. But anyways, the proof is in the pudding, right? So anyways, so the Swiss National Bank, whenever that was, 10 years ago, they pulled the plug, they shocked the world, even lied to the world, and the Euro Swissy dropped more than 5,000 pips in 1 minute. More than that. I mean, it just a total collapse. More than 5,000. Could be 10,000. There was nothing on the other side. And big Forex brokers went out of business that day. FXCM in the United States, Alpari out of the UK. What does that tell you? What does that tell you immediately if the broker went out of business in 1 minute? Who was on the other side of the trade? So anyway, so I called Traders Way. Well, I didn't call them. I pinged them. So anyways, I get a hold of them and I'm like, guys, Alpari just went out of business. FXCM's out of business. Everyone else is rumored to go out of business. How are you guys doing? How are you guys doing? And they're like, we're fine. I'm like, what do you mean you're fine? We're like, well, we executed all the trades. They're all in the interbanking system. It has nothing to do with us. We're an ECN. The order comes in and goes out. We executed the trades. That's it. I'm like, you're totally fine. They're like, yeah. Huh. Really? Yeah. I said, you guys need to send out a press release. They're like, that's a good idea. I'm like, yeah, people are freaking out. It's the end of the world. Oh, yeah, we're fine. We're totally fine. Meanwhile, competitors 10 times bigger were going out of business. Yeah. But they provide a service. That's it. Everyone, right? So think of most brokers as a dark pool of amateur retail traders. Eventually, they all lose. It's like a casino. Everyone walks in eventually, right? Eventually, everybody loses, right? On aggregate, everybody loses. And what happens when the casino finds someone that's actually winning too much? They kick them out. Right? So anyway, just look, you need good research, you need good tools, you need a good team. Like TRADARS offers performance coaching 5 hours a day most of the time. Right? So you got good analytics, fundamentally, technically. You have a team of coaches. And you have good execution. It's perfect. TRADARS and Traders Way. It's beautiful. This is what you need. This is your whole infrastructure, your whole team. And now, even though you're a small trader, right? You probably don't have $1 billion or $100 million. Okay, great. You're a small trader, but you don't have to be an amateur retail trader anymore. You can be a sophisticated, small institutional retail trader. You're an institutional retail trader, right? You can be well informed and make institutional quality decisions. And therefore, do you think if you had all that infrastructure and that team, think of it, you're going to get, you got a team of people that are experts in things like trading the stock market, trading crypto, price action, options, right? We have a good team. I'm an economist. This is great. So you have a whole team working for you. This is it. You have a real legitimate Forex trading business. I want you to think about it that way. I want you to come in thinking with the right mindset. There's lots of YouTubers who will help you scalp and get rich quick. Yeah, good. Go get rich quick. Or you stay here and build a sustainable business. Okay, so anywho, how about that gold? How about that gold? Anybody? Anybody concerned? Why would this come down? Okay. And what is the level of risk? It's more like if it came down. Okay. If it came down. What's the rationale behind it? Don't say double top. Double top's a consequence. Okay. Fundamentals lead technicals. Not everyone's going to agree with me. You can challenge me all you want. I'm a big boy. To me, technicals are just the time and price in which things would reverse. Okay. But if, okay, let's say NASDAQ, National Association of Security Dealers. There you go. Sorry. Okay. If NASDAQ falls, why? Why would NASDAQ fall? Let's just focus on NASI. I want to keep this as focused as possible, not esoteric conversation about what could, might, would, likely, maybe. Okay, I'm not getting many answers. Okay, why has NASDAQ gone up 30% over the last year? Is it because people are buying all the tech companies? Or is it because they're buying some of the tech companies? Now, Jim gets to sort of the general point. People are concerned, but that's not what happened here. People are concerned it's overvalued. Yeah, sure. It can go up for years. It can go up and up and up and up and up. And the whole time, people are concerned. So from the recovery after 2008 all the way to 2016, we had a bull rally and nobody liked it. Nobody felt comfortable. Everything's overvalued. Everything might collapse again. The Fed's raising interest rates again. We have Trump. It still went up and up and up and up, and nobody felt comfortable. Oh, Trump's doing a tariff on China on steel and aluminum. Yeah, well, the market still went up. But that doesn't cause that red candle. So there's something else, right? We need the catalyst. We need the first snowball at the top of the snowy mountain. Okay. All right. So over the last year, NASDAQ has gone up very, very significantly, but the Magnificent Seven was a huge part of it. Anything related to AI was a huge part. So I don't know what the numbers were, but 5% of the companies produced 75% of the profits, right? And 75% of the rally. All right. Now, the leader of that pack has been NVIDIA. NVIDIA can charge anything it wants for its products, and it has unlimited amount of customers. That doesn't sound right, does it? Does that sound like that's sustainable? They can charge anything they want, and they can sell everything they make at any price. Does that sound like fair market value? Well, the answer to that is yes, if they are the entire market. So what do you need? What's the missing component to have fair market value? Competition. So, Google's tinkering, Meta's tinkering, some other companies are tinkering. Oh, well, we'll have something. But for the very first time on that double top day, it was announced that China is releasing a very competitive alternative to NVIDIA, which means that day, that red candle shows that NVIDIA can no longer sell everything it makes at any price it chooses. They currently charge $33,000. Now, what if a competitor came out and charged $3,000? What's the fair market value for NVIDIA? What's the market price for NVIDIA? If you can get a reasonable alternative, maybe it's not quite as good as Blackwell. Let's say it's reasonably good. It's reasonably competitive. Well, not everybody needs a $33,000 AI chip. Maybe for most people, the $3,000 one is good enough. Well, hell's bells. That lowers the value of a Blackwell chip because now there's competition, and now we can do the supply and demand equilibrium. And the proper market price will be discovered. This is called capitalism. So, if NVIDIA only has 50% profit margins and not 300% profit margins, the company is less valuable. And in particular over time, because you can do the math, right? Discounted cash flows is a good one. The time value of money, all that kind of stuff. So, so now we might have to have a repricing of all AI companies. Now, some might benefit because they are selling AI basically, and now their cost of doing business just got cheaper. They might win. But if you're NVIDIA, you may not win. You may actually lose to competition, lose market share, lose pricing power. And so the interesting thing is, if much of the NASDAQ up over the last 18 months was NVIDIA, is it possible we can come down for 3 months? Well, that's disinflationary, isn't it? Now, I know we're talking about NASDAQ, but now we're talking about the stock market falling for, let's say, 12 weeks. Like, not the end of the world, but definitely a repricing of AI stocks. People were buying it because there was no competition, but now there's competition. Like, for example, in the United States, there's American car companies make electric cars. Yeah, well, Tesla is a Tesla, and everything else is kind of like, dude, your Nissan Leaf is not a Tesla. Okay. So right now you could there's some competition, but Tesla's Tesla. Yeah, but all of a sudden, if we were selling BYD in the United States like they do in Europe, one of the reasons European car manufacturers are choking on blood right now is because in Europe they can buy a Chinese car for cheap, and it's a good car. And, it's cheaper than a BMW. It's cheaper than a Porsche. It's better than a Volkswagen electric car. They're behind the 8 ball on that. So all of a sudden, real competition drops the price. So if they suddenly sold Chinese electric cars in the United States, guess what? You would assume at some point a Tesla comes down in price, profit margins come down, the value of Tesla comes down. So inflation comes down if the stock market comes down because the price is falling. The price of the stock market. Well, that is, by definition, disinflationary, isn't it? Well, it translates to household wealth effect. So now you feel like you're poor because you log into your retirement account and you just lost $40,000. You're like, oh, I guess I'm not going to go on that fancy vacation this year. I don't think I'm going to get a new car this year. I don't think I'm going to build that back deck. I'll see if I can wait a couple more years for the market to return. You see? So now demand for other things start falling, and guess what? Prices come down for hotels. Prices come down for airlines. Prices come down for lumber because demand is falling across the board. That's disinflationary. Do you want to own gold? No. There's no need. Okay? There's no need. There is a time to buy gold, and it's when inflation is going back up. And that's the current thing that we were worried about up until here, weren't we? Were we worried about disinflation here? No. What was the worry? The Fed cut 2 interest cuts. They cut 2 cuts. 2 cuts! Because they're worried about inflation coming back. Oh, yeah. So you buy gold, right? So here's the new narrative. We're going to hear from the Fed on Wednesday. And then the next meeting is the super, super, super important one. And what happens next will impact the super, super, super important one. The one in March. Right? I think it's March, or is it end of February? When's the next Fed meeting? Not the one on Wednesday. Can somebody get me a date? But here's my point. This, from that peak to this valley, that is not a double top. It looks like a double top. It's not a double top. Double tops are technical. That's fundamental. So if this new narrative happens, if we have in the next, let's say today, tomorrow, if we have one of these things, thank you, it is March. Yeah, third week of March, right? Yeah, amazing, isn't it? Third week of March. Okay. So, again, thread the narrative. If the Mag 7 have serious competition now, something has fundamentally changed. Okay? And we can have a repricing, a pricing discovery. Am I talking about a collapse in the economy? No. Is NVIDIA and related companies overvalued? Yes. Why? Real competition. Okay? Unless it's a deep fake. Okay? But if we learn over the next couple of days, let's say we can't learn anything new. We just know it's possible that NVIDIA has competition, therefore way overvalued. Okay, great. If we stick with that, we're going to have the green in the screen in the morning, and we're going to end lower. Okay, and then the Fed talks about, oh yeah, they're not going to say it's the end of the world, but they will be asked. You're like, Chairman Powell, NVIDIA is down 20%, and we have competition from overseas. Are you worried about a collapse in American innovation advantages and a crash in the stock market and the need to cut interest rates in the future, aka a Fed put. I don't know. Blah, blah, blah. He's going to have to say they notice it, and it could be short-term effects, but just the fact that they're noticing it is interesting. Now, let's say then we go through a period of okay, not a double top of a double top, but of a lower high of a double top. Okay, so we make a higher high, and then we come back down to resume a new lower low. What do we call this pattern? Where it makes a lower high, lower low, higher high, lower low. Remember, TRADARS technical tool will show you that it's happening, but I want you to know what it is, why it's happening. Anybody want to guess? Well, that's sort of a me thing, but the generally accepted rollovers, no. Think TRADARS, guys. Think TRADARS. There's only 20 patterns that matter. And of them, there's only a few that are in particular reversal type patterns. Hello. Well, Jim, again, think TRADARS. Is there a 1, 2, 3 pattern in TRADARS technical? Now, Mike says breakout pattern. No, and too generic. All right. I guess I'm just going to answer it. Oh, is it a lag? We're laggy today? Yeah, okay. This is a Gartley. It's a harmonic. There we go. Juliet's got it. Yeah. Yeah. It's a Gartley. And what it's happening is it's reversing on a higher time frame. You see this first pattern? Let me do it in blue. Okay, this first pattern is here, right? Down, up, down. But on a higher time frame, what's happened? Down, up, down. It's the same pattern, different time frame. Okay. So that means the stock market could end up coming down further. And that's why I say all the way down till the March-April period, in which on March 20th, the stock market, let's say some of the stocks are now down 25%, and the S&P's down 12%. Fed cuts interest rates March 20th, and in the SEP adds an additional cut. So 2 more cuts. So we went from 1 cut to 3 cuts. Okay. It's the end of the world as you know it. So anyways, I don't know if any of that's going to happen. Here's what I'm trying to do today, since I haven't seen you in a while. I just want you to know the Wayne's back. Yeah, and I'm just trying to whet your appetite about like thinking of the future, gathering intelligence, and formulating a strategy by being able to take the fundamentals and the technicals and thread them together into one narrative. Okay? Cool. So Emerald says, let's look at the yen pairs. Okay, cool. Emerald, you tell me, are the yen pairs up or down? I guess I'll get out of there. Are the yen pairs up or down? Look at this central pivot, just like ridiculous. Emerald. Bam! Come on, Emerald. Bullish or bearish? All right. And you believe the Japanese yen would be strong in that case? So you're, yeah. That. Yen pairs down, long Japanese yen. Is that right? Well, Richard, I'm an economist. Yeah. Oh, for sure. Yeah, we call that macroeconomics. Come on, Emerald, I'm double checking. This lag is killing me. So you're buying Japanese yen. You're bullish the Japanese yen. Okay. And I'm assuming that you are bullish Japanese yen. It's because you see that the yen pairs are, many of them are falling. Okay. All right. I can't wait for Emerald. This is killing me. It's too slow. All right. So here's the thing. And I've already done this with our fundamental analysis team. I agree with you. It looks like the yen pairs are falling. Yes. Like this one is definitely bearish. Okay, great. And it also, one would assume, therefore, people are selling Kiwi, which may or may not be true. And they're buying yen, which may or may not be true. So the question is money moving from New Zealand to the Japanese yen, and therefore you're bullish on the yen? Well, technically, that's what it looks like. Okay, technically, that's what it looks like. Fundamentally, I've already analyzed it, and it's not true. The yen is not strong. The yen is less weak. Looks like the yen is strong because yen pairs are falling. And that is not complete information. Okay? In fact, almost nobody bought the Japanese yen. In fact, even less people may have bought it than before. But what I can tell you is those that were in carry trades have taken profit on their carry trades. That's what I can prove to you. But that doesn't mean people are actually buying the Japanese yen right now. So it's incomplete information. Technically, that's what it looks like, but that's not what is actually happening. Cool. That's why we do fundamental analysis. So now you know you could be modestly bearish on yen pairs. Like, let's say you wanted to sell Kiwi yen. You could say, well, I want to take that down, but I'm going to be cautious because right now I can't prove other people are doing what I'm doing. What I'm suggesting is you can do whatever you want to do, but if you sell this, you may be the only person selling. Now, it's falling, but it's only because the bulls that bought down here or here have gotten knocked out and they've given up and went up to the central pivot and they've given up, they collapsed, they got knocked out, and they're no longer long. They're just no longer long, Emerald. doesn't mean they're selling. So now you sell because you're like, well, I guess if it's not going to go up, it's not going to go down. Well, what if it just moves sideways for 3, 4, 5 months? Now, how do I know all this? The government works for me. And they give me their secrets. Would anybody like the U.S. government to gather all this information for you and then tell you what's actually happening behind the scenes in the markets? Would anybody like that type of information? Yeah. Hey, never ask a question unless you already know the answer, right? You're like, no, Wayne, I don't want to know that kind of information. Yeah, okay, here it is. Brothers and sisters, pump up the volume. Brothers and sisters, pump up the volume. Okay. Okay, check this out. Oh, hey, Emerald, look. Yen is 3.3% stronger than it used to be. So it's bullish, right? Well, 12,000 carry traders left the market. 12,000. And less than, basically 2,500 went long. 2,700 bulls and 12,000 less bears. Dude, it only went up because the difference is, let's just say 10,000. 10,000 less carry traders, which means all these guys were long Kiwi yen. Well, not all of them, but the yen pairs. So imagine a big part of this is Kiwi yen, and you're selling it because it's falling because the yen is strong. And I'm like, no, it's not. It's not strong at all. There's 500% less bears versus more bulls. They're not really buying the yen. So the yen pairs stop going up, but they don't necessarily drop like a ton of bricks. Not that I can prove. Not yet, not now. Now maybe things change and the stock markets end up dropping 10 or 15%, like I said, because of the Magnificent Seven being repriced. Remember, it's not a crisis or a crash. It's overvalued now, right? So if we had a 10 or 20% decline in NASDAQ, well, what we'll see over time is maybe people will actually buy the Japanese yen. But all we know is there's just 500%, okay, greater change in less people long. So just think of the volume of people long has dramatically dropped and like hardly anybody shorted. That's what I want you to think about. Hardly anyone has shorted this. So what's the likelihood in the beginning, in the near future, let's say? What's more likely, down? Well, you'd need to have a fundamental change in the stock market. We'd have to be fundamentally, totally risk off. Maybe it's a Trump tariff. Maybe it's geopolitical risk. Maybe it's terrorism, or maybe it's the stock market crashing. Okay. Then we will see the flow people actually dramatically buying yen. Okay. Have we seen that? No. So what's the more realistic future? Okay. That's still more likely. Now, over time, as we get closer and closer to Canada Day, okay? So I'd say blue is best case scenario. Pink is best case scenario. Trump cuts taxes, but he doesn't actually institute any real tariffs, and we get that sweet spot. He deregulates the United States, cuts taxes, and there's no real serious drama on the tariff front. Boom. off we go. Hot to go, HOTTOGO. And I already talked about this in the annual outlook. That means the Fed will probably not cut interest rates anymore. Maybe at best one this year and one next year. But realistically, they're basically done, which is perfectly fine. Now, we'd have a little bit of drama around them removing that last cut in December. But once we get past that emotion, what'll happen is, oh, well, money stays at 4.25, or 4.5, I should say. Not the end of the world. We can live with that. Meanwhile, boom, Trump's cutting taxes and doing some other interesting things. Great. We just live with it and move on.com, and you got your best case scenario. Your worst case, well, we need a trigger, don't we? So we're not quite there yet. So here's the thing, guys. Should you be long and strong and confident like an 800-pound gorilla? Yeah, I'm selling Kiwi yen because technically it's down. And then I would say, whoa, don't be so sure, King Kong. Don't be so sure. Right now, there are 5 times, right, more people exiting than entering in the direction that you're going. You're kind of out there by yourself. And will that work as an amateur trader? No. So, say institutional quality decision making. It's beautiful, isn't it? Oops. It's beautiful, isn't it? Gorgeous. You got to know this stuff. So I already went through gold today as being an example of how to use seasonality, institutional positioning data, change in flow, and the use of technical analysis to be in trades for months and not minutes. Cool. You should have been there. We did that this morning. You guys want to do some technical analysis? Is that right, Richard? That's awesome. So what I mean, like Richard, is let's say pound yen falls despite what I just did, right? When I told you fundamentally what's actually happening, right? Now, things change quickly, day to day, hour by hour, but we know that to be generally true, right? It's generally true. I can prove it. That's gathered by the government. It's reported. We know it to be true, so it's true. Okay, but it doesn't mean it's happening every particular hour of every particular day. It's changing right now. But we know in general, that's the truth. People are not actually significantly buying the Japanese yen, but it doesn't mean pound yen doesn't come down today. But the difference is knowing whether you should hold for 3 hours or 3 weeks. The difference is knowing, do you, let's say, sell today, let it fall, you make 75 pips, you take profit and walk away? Or is it the type of trade where you can sell it, let it fall, let it rise, sell the lower high, let those fall, let it rise, sell a third one, right? Are you in a situation where you can compound and build a position? Or should you just day trade? There's a difference, isn't there? They're both perfectly great trading strategies. I love day trading. But the difference is knowing when to day trade versus swing trade, right? What's up, Danny boy? Yeah, boy! Right? So that's what I'm trying to say, right, Richard? So you can day trade. You can pick up some. Just make sure you know you're the only one at the moment that I can prove is doing it. But you're like, yeah, well, it's a nice little day trade. I'm going to kick it off the central pivot and drop it down into the M1. You're like, dude, by all means, especially if you have the technicals. But the technicals, they only tell you entries and exits, but they don't tell you, is it a day trade? Is it a swing trade? Is it a position trade? Are you using daily pivots, weekly pivots, monthly pivots, or annual pivots? Yeah. Well, that's the bigger question, right? Okay. And that's one of the puzzles we're trying to solve. We're trying to solve for the time, not the price. Yeah, of course, Richard. And 25 years from now, and you're an amazing trader, you and I are both still going to struggle with that. That's the value that we add. Dude, anybody can sell off of a moving average, right? But it's the bigger picture of, can you make institutional quality decisions of how do you place a valuation on each individual trade? The decision, Richard, is not to buy or sell pound yen. That shouldn't be a complicated issue. The issue is it worth 250 pips? Or let's say this. The issue is it worth 25 pips, 250 pips, or 2,500 pips? We can all trade it the same way. The entry is always going to be the same. The risk management's different and the target's different. So the real value is trading. Trading's the easiest part of this whole thing. Dude, buy it at the moving average. What's the problem? Okay? The complicated part is what's the value of each trade? 25 pips, 250 pips, 2,500 pips. Are you in and out, or do you build up a position? So really it's 25,000 pips. Okay? So that's where I need to get you guys. So are you ready to build a pound yen short position? No, I don't think we have evidence for that. But go ahead and day trade it. Hey, if you can make 25 to 75, by all means, pick up some pennies. Okay? Now, if that's a lot of money, you're over leveraged. You're like, dude, it's crazy. I made 50 pips today. It's so much money. You're over leveraged. Yeah. Right? The only way you should be able to make big money is that you recognize a 250 pip trade and you recognize a 2,500 pip trade. And that's how you set up and manage and build positions. If you can't do that, you're going to stay small. Okay? Okay? Do you want to be a diamond miner? Chipping away down in the dark all day, every day, trying to pick up some shiny pieces of stone? Or would you like to own the gold mine? Or sorry, the diamond mine. Right? The diamond mine. The difference is smaller time frame is relentlessly hard work. Brutal. And you can work hard all day and not make any money. You're just down in the mine, chipping away. Okay? The bigger picture stuff, you can take your time getting in, and then you leave it, so you're taking even significantly more time to get out. Getting in is easy. Getting out is the harder part. Like, how long can you let it run, and can you build your position? See, there's a different thing. It's a different value proposition. You're not down there chipping away down in a dark hole with a little pickaxe. Pick, 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 pick. You own the whole mine. It's much bigger. Now you're worried about the value of diamonds or gold or whatever you're down there chipping for. You're chipping away trying to find some chromium. Well, what's the market value of chromium? And how much does it cost to have your employees, right? Like, you're thinking different things than the dude down there with the pickaxe. So anyways, both are valuable. Both are adding value to the organization. The thing is, I'm trying to give you the bigger picture stuff where you make bigger decisions, make bigger money. And now you're saying, well, I can day trade this, but I won't get out. I'll day trade it in, but I won't get out. And tomorrow, I'll day trade in another, but I won't get out of that one. And then the next day, I'll day trade into that and not get out. Now you're in 3 positions because you know this is a 2,000 pip fundamental move and not just individual little 50 pip trades. The trading doesn't change. Every trade's going to be the same. Well, not the same, but you understand the technique. It's just, hey, dude, it's a bullish thing. Buy in the daily pivots. And what about tomorrow? Buy in the daily pivots. What about the next day? Buy in the daily pivots. So your decision isn't how to get in. The decision is not to get out. That is the big money, my friend. Not skippity scalping. Scalp in and stay in. Scalp in another one and stay in. Scalp in another one and stay in. How do you know that? Fundamentals and long-term technicals. Seasonality. You have to have the data. You have to make more valuable decisions. Yeah, Lucas. Yeah. Yeah, it's like planting and focusing on increasing yield of your crop. Right? I guess there's 2 ways, right, Lucas? Planting and increasing your yield, or planting more fields. Oh, I can get it, I can get the back 25 there, and I can, add 25 more acres. Plant 24, right, every year. So I guess what I'm getting to is there's times to plant, build up positions, but also as your account grows, it's like buying more land too, isn't it? So you're increasing the yield per acre and increasing the acreage. But with scalping, you never get there. Planting one sorghum seed at a time. Cool. You guys having fun? I missed you. Most of you are like, just show me the damn trade setups. Whatever, man. I'm trying to give you the value. What to do? If you don't know what to do, you have a problem. You need to be trained. You need a team. You need coaching. How about 100 hours of training courses? Yeah. Sure. How about 5 hours of coaching a day? But it's like, dude, if you need somebody to tell you what to do, you have a problem. This is about value add. Alpha. We call it alpha. If you can't generate alpha, you are not a trader. That's brutally honest, and you'll always get honesty from me. If you can't create your own alpha, you're not gonna make it. Actually, in that case, your alpha would be give a professional who can discover and create and take advantage of alpha, and you give them money. Your alpha is giving them money. But I'd rather I want you to be an independent trader. I'm not going to tell you what to do. I'm not going to belittle you like that. There's a 25-year-old YouTuber that, is giving you scalping trades all day, every day, and drives much fancier cars than me. What do I spend $400,000 on? Sending my children to university. Yeah, that's the difference between a boy and a man. Lambo, how about retirement account? fancy vacations at exotic locations, or donating hundreds of hours to charitable work. Anyway, so let's get on with running a business, man. All right. We can filter all this out to just the pairs that we want. Right now, it's filtered to patterns that I like. But it's not necessarily, it's not targeted at all to things that I want. Like, do I want to trade Euro Kiwi? Well, I don't know. We answer that question over here. Okay. Do you guys like Euro Kiwi? Yeah, it's okay. Institutions don't really seem to love it or hate it. Retail's long. That's not necessarily good. They're not very long. They're slightly long. Seasonally, it's okay. But then you start to get into the economies here. Euro's not that great, nor is New Zealand. So it's really just sort of like, yeah, it's okay. That's why it's like slightly bullish, and of everything, it's kind of like least bullish. So I could get long Euro dollar. What about Euro Aussie? No. And look at COT here on S&P 500. Oh, so everything on an aggregate is bullish, but what's actually happening here? Can you guys explain it? Interest rates bullish, jobs bullish, inflation bullish, GDP, right? Bullish, technical trend, right? Bullish, seasonality, bullish, retail sentiment, bullish. What is this? Institutional investors are definitely not bullish. Retail is, institution is definitely not. Something has happened. Should you pay attention to this or to the 9? Wayne, just tell me, bullish or bearish? Dude, put a little thought into it. Yes, based on macroeconomics, things have been what we would expect to be bullish for the stock market. Yeah, we have a growing economy. Inflation's not crazy. It's not low, but it's not crazy. We have a huge job market. Our GDP is nuts. Seasonally, this is a pretty decent time, but this is the news to use. Large institutional hedge funds have changed all their positions. And until that turns green, I might want to take a walk. Now, does that make you worry that the S&P 500 is actually going to come down hard? Well, now you're talking, my friend. Now you're talking. Now you're thinking. But could I go long Euro Kiwi? Yeah, I could. All right. So if I have permission to think about it, okay, we haven't decided yet. It's you only, the thing is, what we've seen is it doesn't outlaw Euro Kiwi. It doesn't tell you to buy Euro Kiwi, but you could if the technicals lined up. So does this pattern show strength or weakness? That's right, my phone is just freaking out. Just some other stupid thing. All right. Strength. Okay. So, is the next leg an opportunity or threat? We're doing SWOT analysis. You should be doing this. Everything you do at this point, you could buy Euro Kiwi. The thing is, how do you analyze the situation? Yeah, the next leg is up, as you see by the gray arrow. So that's an opportunity. Now, is that an amazing opportunity? Well, we're getting squeezed into the apex, so probably not. And fundamentals are like, it's slightly bullish. So you can look at that and say, yeah, what's up, doc? Right? You're like, maybe. Could you do it? Oh, yeah. It's called price action. So now that's the pattern. What's the other way to play it? Yeah, higher high, higher low. That's, again, like the technical stuff is easy, right? Boom, boom, boom. But most of you don't even know to look at this and not look at that. You're looking at all the wrong things, right? And all the wrong places. How's that song go? There's an old country song. Not looking for love in all the wrong places. Or as Eddie Murphy would say, wooking for love. Anyways, you're like, yeah, maybe. Put that on your maybe list. And now you rinse and repeat. Well, what do you think about USD yen? What do you think about Swissy versus yen? What do you think about pound versus CAD? So you'd have to think about it. What does the pattern show you? The pattern is just one part of it, right? What is the pattern? Let it break, let it hit the target. Then make a lower high using price action as a role reversal. Or if you prefer, let me do it another way. You might prefer this technique. It's all the same. I don't care how you do it. It ends up being the same. You extend this out into the future. And what you're trading is this. Lower low, lower high, drop it like it's hot. Okay? Drop it like it's hot. The entry, okay, is here. So this break is not a signal. It says down. It doesn't say sell. It says the next leg is down. It looks like that is correct, and it is down, but it's an if-then statement. It's an if-then statement. Let it break. What does it mean if we break to the downside? That is probably bearish. Right now, it's a guess. That's why it's a triangle. What does a triangle show you? No direction. Oops. I thought that was going to be a line. Okay, what does a triangle show you? Nothing. The closer you get to the apex, the more likely a breakout. So if you get to the apex and it breaks, good. More likely to be bearish. Now that you're a bear, what do bears do? Sell low? No. Do they sell breaks? No. See, that's what you were taught. Sell the break. Wrong. You were taught wrong. It's in books. It's in lectures. Gurus teach it. They say trade the break. Wrong, wrong, wrong. They're wrong. They're 100% wrong. Unless you're trying to pick up pennies and fry them for a freight train. You're like, well, Wayne, I made 12 pips on the break. Yeah, good for you, son. Good for you. The way you trade it is that. Okay? You let it break, you let it pull back, and you drop it like it's hot. You don't even have to guess. You don't have to be early in the trade. Let other people do the hard work, and you're the one with patience and discipline. It's kick ass. Dude, we're burning through 7,500 charts. I'm ignoring every pair and asset, right? In this case, Forex. And I'm ignoring certain other patterns that may or may not exist. I don't have any Gartleys here. But if I was worried about a double top creating a Gartley, I can just turn the Gartleys on. And I can just turn Gartleys on for that particular pair, like the gold, I guess it was, right? So let me show you that. Right? Because we talked about gold earlier, right? And we talked about a lower low, developing a lower high, developing a lower low, developing a higher high, developing a lower low. It's a harmonic pattern. So we go to commodities, okay? And we were talking about gold. So only give me gold because I'm worried about the Gartley on gold and on particular higher time frames. Great. And I want a Fibonacci harmonic pattern. Great. So now I only look at gold and I'm only looking for the patterns, and there isn't one now. Good. So do we short gold? No. Is it possible in the future? Oh, yeah. In particular, if the stock market falls. You see how gorgeous this is? Look, I just looked at gold for Gartley patterns on multiple time frames, and it took me 1 second. At the very least, if you were going to do that on the 15-minute, you'd have to open it up, look at it, and analyze, is there a Gartley? And then the hour, then the 4 hour. Well, wait, the 15-minute, the 30-minute, the hour, the 4 hour, and daily. So how long would it take you to analyze 5 different charts to see the probability of a Gartley forming? Not that it has formed, but that it might be forming. Well, it took me 2 seconds. I bet you take you longer than 2 seconds. Dude, we don't mess around here at TRADARS, huh? We don't mess around. Look, we have Gartley patterns on the stock indices. Uh-oh. Are they Gartleys? They're not Gartleys. Okay. But we got DAX and we got S&P doing almost exactly the same thing, huh? Cool, right? Yeah. All right, so let's turn our more useful patterns on. That's kind of looking for reversals. I'm turning them off because I'm a trend trader. And when I get concerned, like maybe hitting key pivot point levels, that's what I want to focus on first. What is the pattern? Okay, so let's say we have a pattern like this. Okay, I'm a bull, right? What do I care about technically? Well, I like to look for pivots. Okay, there's my entry zone. And what if I ran into an exit zone up here? Should I increase my worry of maybe I should take profit on this trade, on this trade, on this trade, on this trade? Should I buy the next dip or should I look to take profit? Well, that's where you can then turn on Fibonacci patterns on smaller time frames and to see, is it reversing here? But the first thing is I need to know, do I want to buy? And if I already know that, I am a buyer. Then the second thing is it trending? So that's why I only look at the trending chart patterns. Is it trending up? Yes. Then I'm in the business of buying dips. Then that's it. I'm a bull and it's trending up. Go to my charts, use price action and pivot points. Buy zone, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 out. Okay? You see? So I want you to focus on alpha, your ability to create value. If you want a sustainable business, your decision-making process isn't just entering and exiting trades. It's creating value and knowing how long to stay in. The entry is the easy part, right? Once you learn how to do technical analysis, entering is the easy part. The complicated part that's always going to be complicated is creating the value for every trade you make. Is it worth 25, 250 or 2,500? Well, those are adult decisions now. Okay, that's professional league decisions. Okay? Not high school hoops, not college hoops, not street ball. This is NBA. Okay? So to compete, you need these pieces. And the most valuable part of your trade is after you've made your trade. Okay? And if you are only in the trade for a few minutes or a couple of hours, then every single day you're going to walk to the coal mine, take the elevator down, and just chip, chip, chip away another bucket of coal, and you can make your little bit of money. That doesn't sound good to me. Okay? So focus on making better, more valuable decisions. And for that, you're not going to need TRADARS. That's it. I built it for you. It's not like I built this and now I have to convince you to use it. This is for you. This is it. You can have it right now. You can have a whole institutional business for $300 a month. Dude, it's nothing. So there it is. There you go. Hey, I'm going to be around. I have a Fed meeting today. Another one. This is like my sixth one. I don't know what time it is. I'm hoping it's at 3 so I can log in and get most of it and log out for 4 o'clock. My worry is it's at 4 o'clock. And today is Tuesday, which means then we are doing the week on the street. So in that case, I might have to move our Tuesday meeting. I just was away, but I might need to move our Tuesday week on the street to Wednesday. Maybe. So check your email. If I reschedule it till tomorrow, you'll probably get an email from me. But I'll only do it if I absolutely have to, because the Fed doesn't record their meetings. So when we meet, in this case it's a Zoom, right? But there's no recording, so it's not like I can just watch the recording. If I could, I would. Right? If I could, I would. If I could, let it go. So anyways, please continue to be flexible with the Wayne. So I don't know yet. Okay? But I am looking forward to the week on the street. ASAP. So peace on earth. May the pips be with you. May your profits be above average. Hope you have a wonderful day in the markets. Did they open? Oh, they're open. Is it bloodbath? Is it good? Oh, well, I better go, yo. So I'll see you when I see you. Thank you for everything you do.